Hong Kong's property market has long been a major source of wealth. The city's billionaire ranks are dominated by developers who got rich by acquiring sizable land banks that allowed them to manage land costs and boost profit margins. But recently, a tussle over valuations between those developers and the government, which is the largest seller of land, has resulted in a stalemate that dampens the city's economic prospects. At the apex of the market sits the Hong Kong government, which owns all the city's land and, in the past, has relied on the sale of land leases for more than 50% of its revenue. It is having difficulty finding takers for the 18 parcels of land it earmarked for sale this year. The MTR Corp., which is a major landlord in addition to operating the city's extensive rail network, received no bidders for its latest land development project near the airport, the first time this has happened in 10 years. The deals that have taken place were at bargain rates. This lackluster showing provides yet another chastening indicator of how far Hong Kong's investment market has fallen from its heights 4 or 5 years ago, said Benjamin Chow, head of Asia Real Assets Research at MSCI, whose team tracks acquisitions around the region. The aborted tenders also illustrate the widening chasm in pricing expectations between buyers and sellers, which has plagued not just traditional commercial sectors like offices and retail, but also the land sales market as well. Meanwhile, land lease sales, offered by both government and private players, have fallen to their lowest levels since 2009, according to MSCI. In the government's case, Chow said, it is not just due to the developer's lack of appetite to bid, but also the government's decision not to sell at bids below its assessed values. Of the 2 land sites the government managed to sell this year, one was valued in September at 5,392 Hong Kong dollars per square foot in Kowloon's Kai Tak area near an MTR station, down from more than 3 times as much for a nearby site barely 4 years ago, at 17,600 Hong Kong dollars. It was the lowest value in Kai Tak since 2014. The other site, at a prime location in Hong Kong Island's Kennedy Town, was sold in July at 7,071 Hong Kong dollars per square foot, the lowest value since 2002 for property in the same neighborhood, according to data from industry consultancy JLL. A developer who asked not to be named described the situation as a downward spiral caused by a triple whammy, inflicted by the local currency's dollar peg, along with rising interest rates and a worsening consumer appetite. In a note on the government's land lease sales, JLL said that the recent discounts suggest that developers remain conservative on land price bidding, considering the subdued market sentiment and rising construction and financing costs.